Welcome to the Deep Dive. Today, we're tackling, well, one of the most explosive and, frankly, complex stories on the market.
Absolutely. We're talking about quantum computing, a sector with just incredible gains, and specifically one company right in the middle of it all, D-Wave Quantum. That's QBTS.
Yeah, QBTS. And the numbers are pretty staggering. We're talking about a stock that's up over 3,460% in the last year.
It's just wild, and it's grabbed the attention of what the market calls smart money. You know, the big hedge funds, the billionaires. It's high-stakes stuff.
It really is. A move like that, 3,460%,
Mm-hmm.
it suggests this belief that the technology is either absolutely revolutionary or, well, maybe nothing. So our mission today is to dig deeper than just that price chart
Right. We need to understand the tech D-Wave is banking on.
and unpack the debate around their specific approach because it is controversial.
And crucially, look at the financials behind this, $10 billion plus valuation.
Exactly. But first, a really important note for you listening.
Yes, definitely. Seeing big names like Paul Tudor Jones or Ken Griffin's funds jump in, it can feel like validation. But look, this is super speculative.
Highly speculative.
These funds often have much shorter time horizons, maybe 12, 18 months. They might be playing momentum, near-term news.
So bottom line, you absolutely need to do your own homework here. This isn't a sure thing just because some big funds are involved.
Couldn't agree more.
Okay, so let's lay the groundwork. Why this huge bet? Why are investors, who usually love concrete numbers, pouring money into something still so, well, almost academic in some ways?
It comes down to the sheer scale of the opportunity. Quantum computing isn't just a faster computer. It's seen as the next fundamental kind of computer, a complete paradigm shift.
Right. So how does it actually work? What's the core difference?
Okay, so think about the computers we use every day. They run on bits.
Zeros and ones, on or off.
Exactly. Binary. Simple, sequential. But quantum computers use qubits.
Qubits, and they're different because
They operate based on quantum mechanics. The key idea is superposition.
superposition. Okay, break that down.
Well, imagine spinning a coin. While it's spinning, it's not heads, it's not tails. It's kind of both at once, right? Until it lands.
Okay.
A qubit is similar. It can be a 0, a 1, or critically, it can exist in a state of being both 0 and 1 simultaneously.
Both at the same time. That's the part that bends my brain a little.
It bends everyone's brain, but that's the source of the power, because it can hold multiple values at once.
It can process way more information.
Exponentially more. Instead of checking solutions one by one, like a classical computer, a quantum computer can explore a vast landscape of possibilities all at the same time.
So it could solve problems that are just impossible today.
Exactly. Things like designing new materials molecule by molecule, or optimizing incredibly complex systems like global logistics or financial modeling in ways that would take today's supercomputers literally thousands of years.
Wow. Okay, the potential is obviously enormous. So let's bring it back to D-Wave specifically. They're doing something different from the rest of the pack, right? That's where the controversy comes in.
That's right. D-Wave has this unique dual-track strategy. On one hand, they are working on traditional gate-based quantum computing. That's the approach most others, like IBM, Google, are taking. Think of it like building a general-purpose quantum computer.
And quantum PC, maybe?
Sort of, yeah. But D-Wave's big focus, and what makes them different, is their investment in quantum annealing.
Quantum annealing. That's the specialized one everyone argues about. What's it good for?
It's designed pretty much exclusively for one type of problem: optimization.
Finding the best possible solution out of a huge number of options.
Precisely. The classic example is the traveling salesman problem, finding the shortest route connecting many cities. Annealing is built to find the lowest energy state, which corresponds to the optimal solution for these kinds of problems.
Like optimizing a supply chain or a financial portfolio.
Exactly. Huge commercial applications there. And the big argument for D-Wave's annealing approach is scalability.
Meaning they can add more qubits faster.
Potentially, yes. Because it's focused on this narrower set of problems, the architecture might allow them to scale up the number of qubits more quickly than the gate-based systems, which are trying to be more general purpose. More qubits equals more power, generally speaking.
Okay, that sounds great. Easier to scale, solves valuable problems.
Yeah.
So why isn't everyone doing it? What's the catch?
Well, the catch is the flip side of specialization. The qubits in an annealing system are harder to control precisely for general computations.
Ah, So it's great for optimization, but not much else.
That's the trade-off, essentially. It's like having a super powerful calculator designed for one specific task versus trying to build a full computer. The annealer can't easily run, say, the wide range of algorithms a gate-based system eventually could.
So D-Wave might get to market faster with a solution for optimization problems,
Right.
while the others are working on the harder problem of a universal quantum computer. That really clarifies the strategic divide.
It's a massive gamble, really, and you see this reflected in what the experts say. Doug Fink, over at Global Quantum Intelligence, pointed out that offering both systems gives D-Wave flexibility. Customers might want annealing now for optimization.
That makes sense from a business perspective. Get something out the door.
But Finker also mentioned the skepticism. There's a real concern among some experts.
What's the worry? That annealing becomes obsolete.
Exactly. The thinking is, gate-based systems are currently battling huge noise and error correction problems. It's really hard. But if they solve that,
If they get clean, powerful, gate-based machines.
then those machines could potentially solve all problems, including the optimization ones that annealing is good at, maybe even better. And then, poof, the specialized annealer isn't needed anymore.
So D-Wave is racing against the clock. They need to establish their annealing tech and make money from it before the gate-based systems potentially leapfrog them.
That's the race in a nutshell. And you can see why investors are piling in their betting D-Wave can win that early race, or at least gain significant traction.
Which brings us to who is piling in. Let's talk about that smart money we mentioned. The Q2 filings showed some really big moves.
Oh, yeah. Pretty significant institutional buying. Paul Tudor Jones Fund, Tudor Investment Corp, huge name in macro trading they bought in, started a brand new position.
How much?
Over 827,000 shares. That's not pocket change.
Definitely not. And Ken Griffin's Citadel.
Citadel Advisors, another giant. They also initiated a new position, looks like about 84,000 shares.
Okay, new positions from major players, but Millennium Management did something even more dramatic.
Yeah, Israel Englanders Millennium, they already had a position, but they increased it massively by 948%.
Wow, nearly a tenfold increase.
Yeah, they now hold over 380,000 shares. When you see a fund boost its stake by almost 1,000%, that signals some serious short-term conviction. They likely see a catalyst.
So it could be driving that conviction, right? And it's not just the cool tech, right? Hedge funds need a reason to buy now.
Right, they're often looking for momentum or maybe upcoming news or perhaps, broader sector validation. And we saw a perfect example of that validation recently.
You mean the JP Morgan announcement?
Exactly. JP Morgan Chase, the biggest bank in the U.S., basically said they're pouring billions into strategic sectors tied to national economic security.
And they specifically mentioned quantum.
They specifically called out quantum computing as one of those critical areas. That's huge. When a financial titan like JPM signals that level of investment interest in the whole sector,
It lifts all boats, or at least the perception of it.
precisely, for hedge funds playing that 12, 18-month game, that's a massive green light. It suggests big money is flowing into the ecosystem, which can justify these high valuations, at least for a while.
It paints a picture of momentum, definitely. But we need to ground this in reality. We've talked tech, debate, investors, now the financials, because this is where the speculation really hits home.
Yeah, this is where it gets pretty sobering. D-Wave's market cap right now is hovering around $10.8 billion.
$10.8 billion.
Yeah.
That's what the market thinks the company's worth or will be worth.
It's pricing in a huge amount of future success, obviously.
Okay, so $10.8 billion expectation. What was the reality in the last quarter? What did they actually bring in?
Okay, so Q2 revenue, about $3.1 million.
$3 million against a nearly $11 billion valuation.
Yes. And the other side of that coin, their loss for that same quarter was over $167 million.
Hold on. Revenue of $3 million, loss of $167 million in 3 months.
That's correct.
That's an incredible burn rate. The gap between the valuation and the current financial performance is just vast.
It is stark, and it really underscores the point. Buying QBTS today isn't about current profits or market share. It is a pure high-risk, high-reward bet.
A bet specifically on their ability to eventually commercialize this technology, particularly the annealing part, and make it profitable before the money runs out or competitors catch up.
Exactly. It's binary. If the tech works out, if they successfully commercialize annealing for optimization and capture that market before gate-based systems dominate everything, shareholders could do incredibly well.
But the if is huge. If annealing proves to be a dead end, or if they just can't bridge that gap from $3 million revenue to justifying $11 billion.
Then the stock could obviously face a very significant sell-off. The downside risk is just as spectacular as the potential upside.
Which is why the sources we looked at suggest treating this as, a small speculative slice of a portfolio.
Absolutely. This isn't something you bet the farm on. It's for the speculative portion of your investments, if you have one, and only after doing deep, deep diligence.
Okay, so let's pull this all together. We have D-Wave, a company with this unique, somewhat controversial tech strategy focusing on quantum annealing,
Betting they can scale faster for optimization problems.
drawing in huge investments from top-tier hedge funds, driving the stock price into the stratosphere.
All while having, minimal current revenue and substantial losses against an $11 billion market cap.
It really is a story of Wall Street faith meeting scientific and financial reality.
Perfectly put.
And maybe here's the final thought for you to consider. We know those hedge funds often operate on that 12 to 18-month timeline.
Right.
So is this incredible stock surge we've seen truly about deep confidence in D-Wave's specific long-term technology path? Or is it more about the short-term flood of capital, the momentum, and the sector-wide validation like that big nod from JP Morgan? Which force is really driving the bus right now? That's the multi-billion-dollar question.